Good morning, everybody. Today is the sixth day in the month of July 2022. My name is Heritage Adisa, Markets Analyst at HFM Nigeria. And as always, we check through the markets, find out what the overall sentiment is and what's going on in the marketplace, what are the big stories driving asset prices, if they provide opportunities, and then how we can take advantage of it. But please remember that this is just a communication material. And nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investments in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall market environment is a continuation of the negative flow that we've had, coming through yesterday's session, even in today's session, right? Coming through the whole of last week, last month, over the last 4 months, last quarter, over the last 6 months, really, right? It's really been a bloodbath generally for equities, for risk assets generally. And the major worry has been, rising global inflation, has been global economic recession incoming, has been central bank tightening of monetary policies. All of that has been, weighing on the market. Even COVID-19 cases, especially the ones in China where we had a lot of lockdowns, in line with the Chinese zero COVID policy. All of that has really, weighed on asset prices generally. And then yesterday was even a massive one. As the US traders came back on holiday from the July 4th holiday, we had massive flush of volatility, of liquidity, massive downside for equities, oil prices massively falling, fell about 10% just in yesterday's session alone. Right? We had downside across board. Now, over yesterday we had so much downside. Today now we're seeing a little bit of what I call it hangover now, or a little bit of slowdown, where after such solid moves, markets taking like a breather, and that's where we are in today's session. Now I had this written down earlier. Let me just quickly run through it. Now today, Wednesday, yes, July the 6th, markets slowed down after the solid fall yesterday, but sentiment remains down, right? Loads of downside in yesterday's session as recession fears grip the markets once more, pushing risk assets down heavily. You look at the antipodeans, that's AUD and NZD, falling around 1.5% if you look at it aggregately against the dollar, that's the greenback, and against Japanese yen. Equities, for example, dipped sharply, although later in the day, we had equities pull back, pay some of those losses. Well, bond yields were pulling lower, so that could have been one of the reasons why. But it wasn't even really helping. Generally, we had that, slight paring back in equity futures. So there's that. Um, Oil prices were also down about 10% just in yesterday's session alone. So clearly that was a heavy Tuesday, right, in markets. Now, after the strong moves yesterday, there's a bit of slowdown in markets. A sideways movement, and choppy flows are seen across board. Although the negative environment, the negative flows, the negative buyers, the negative catalysts still remain unchanged. And as a matter of fact, there's even been more negative development, right? For example, we have new COVID cases resurgence in China, where we have light, restrictions here and there. And if that continues again or expands some more, is negative for the market because China has a zero COVID policy. So they would lock down once they see COVID cases. And when that happens as well, you're locking down parts of the second largest economy globally. It slows down trade, slows down supply constraint. It just worsens the entire case. So there's that. There's also been political stress continuing in the UK. And we have two top ministers in UK, even Chancellor Sunak as well, also resigning over PM Johnson's unfit leadership, right? Although he has said he's not resigning yet, forging ahead, he's also employed new ministers, but then that clearly is not a good development for the pound, for the UK, even for sentiment generally. And there's been energy crisis in Europe, right? With talking about gas, rationing as well on the back of the Russia issues with Ukraine. So all of that are still, very much in play, negatives as well, and they're weighing on market sentiment. But because of the massive moves that we had yesterday, so far today we're seeing, some slight moves here and there, lackluster performance, which is not really a surprise after the bout of volatility that we had yesterday. But I wouldn't get carried away just yet. I mean, the negatives are still very much evident, and I'm still looking for opportunities to sell risk assets against the safe assets. You look at the equity space, for example, Asia bounces are still in the red, still trading negatively, but European equities and US futures start slightly higher, but not to get carried away because these movements are just, to pair slight downside that we had in yesterday's session, and the movements are still very small. Bond yields are trading a bit mixed, Commodities, yes, they're also trying to pull its head higher, try to pay some of the losses from yesterday. You look at oil price, for example, US oil is back above the $100 per barrel, just a little bit up, but I'm not looking at this as a recovery just yet. I think there's still so much negatives, and I feel like markets would still be looking for further reasons to sell, the risk assets to the downside. Now, in currencies, right, the moves are marginal, right? Some of those risk assets are trying to catch their breath. And so we are seeing some small movements up and down. And then some other ones are trading flat. Dollar index is trading flat, Euro US is trading flat. But you don't look at the overall moves. Dollar strength still remains evident as the negative environment still supports the dollar. And we have the Japanese yen as well, still remaining strong as well, in line with the overall negative environment. If we look at the moves over the last 24 hours, dollar and JPY still leads, while the euro, the pounds, the CAD sits at the bottom of the majors. And that's not really a surprise. Energy crisis in Europe, political instability in the UK, as well as down oil prices that affects the Canadian dollar. So there's that. Now, looking at pounds US, for example, we're making an attempt to retest 1.200 from the downside. If we get that as well, I think sellers could look at that as an opportunity to push prices lower from that particular environment, especially with the negative risk of sentiment that we have in markets so far. AUD JPY is also another interesting one as well. Yes, we've pulled back some up. We found some resistance around 92.5. Clearly, sellers should be interested in levels like that. In the day ahead, it's going to be, some data points for the US, jobs numbers, private job numbers, as the JOLTS report for the US, ISM non-manufacturing, that's services PMI as well, also expected for the US, and even the FOMC meeting minutes, all on schedule. And then a couple of central bank speakers like Bill Conliffe, as well as the Federal Reserve, member Williams. So generally, we have that risk of flow still very much evident, and I'm still looking for higher levels to sell risk assets against the safe asset. Now, let's quickly look, let's quickly look across the markets quickly. Now, starting with the equity space, for example, this is what I'm talking about, right? Yesterday we had that flush with downside in US 500. Later during the end of the day, we pulled back after hitting clean support around this key 3750 level. Now on this start. So for today, what we are really seeing are just chops, right? Ups and downs, and we're really just moving between these two levels, this 3800 and 3850. Right, still within that level, and that just gives you that more of the mixed flows that we're having so far right now. And it's still the same story across the other equity space, right? Downside yesterday, we recovered some. So far today, we are in the middle there. Oil prices gave us that massive flow to the downside, right? It broke below the $100 per barrel key level. But right now, so far today's session, we've just been meandering around that level as well, and we've not really done so much, which means, being a little bit more patient would not be a surprise on that front. The dollar index is kept flat so far today after solid gains in yesterday's session, right? It's not really a surprise. We're still keeping the gains from yesterday. If we can get maybe a pullback in line with the dollar strength, it's a bit tougher to find the next key level of support to hold on to. But I think the nearest one that we have around here to come in here, which is a bit far, it should be around the 50% retracement level of the moves that we had yesterday. But if we can get a pullback maybe towards daily pivot points, right, around this 105.8, right, that could be interesting. But in the meantime, this flat moves is keeping us a bit neutral. Now, for even the VIX, yesterday we had that massive chop on the back of equity movement, but even today's session, the chops are still there, but it's just still, on smaller ranges, which just makes us a bit more cautious, with what we are seeing. So I'm not looking at the shorter term intraday moves that we're seeing so far in currencies, but paying attention to the longer term overall biases. Let's quickly look at pairs like, the NZD versus the JPY, the AUD against the JPY, CAD against the JPY, even pounds JPY, and just look at what we have. Now, NZD-JPY. Now, this particular one, yes, downside evidence, we pulled back a bit in towards yesterday's close. We've continued lower. We've retested it again, right? This level as well is interesting, in terms of strength and weakness, in terms of support and resistance, rather, right? So there's that to look out for. I think there's still further scope for downside in today's session, in line with the overall negatives that we have. But I have to see equities really continue downwards for me to have better conviction on this particular one. So key area here to look out for, key area here of support in terms of downside to also pay attention to. CAD JPY, also an interesting one as well. Right now, we're trading very close to, this overall support level going back to the 23rd and 24th of June. So it becomes a bit tricky to try and sell into lows like this. But rotation back towards, right? Towards this overall round number around, let me clean this up so it's clearer. All right. Good. Now rotation back towards this key round number 104.5, maybe could be interesting. We already had a pullback towards the lows going back to the 1st of July, which will have been the preferred one, but I think we missed out on that already, right? But it doesn't mean we can't still take advantage of this. If we get another retest here as well, I think we can still look out for further pullbacks for the downside moves on this particular one, in line with the risk off that we're having in the market so far. AED/JPY also an interesting one as well. Already retested, the highs that we had, at the start of American session yesterday. Let's see, it's around the start of American session yesterday, right? Basically, this area, let's just see how we can get it going for us. All right, I think just this little one here. We already had a retest here, but so far today, the small ups and downs that we're seeing makes it just a tad bit tricky. So I'm being more patient to try and jump into or chase the moves that we have, lower so far. But I'm still trying to look for downside opportunities, but not just in a hurry like I would have been in yesterday's session. Pounds USD is still very much weak. And we also had the same story there as well. Retest as well of, hasn't loaded up yet. I think it should load up. There's still the 6th. Internet is a bit down. Let's see. So it's 7th, right? So this hasn't loaded up just perfectly yet, but this is reading 6th of June. Okay, today is 6th rather. Pardon me. All right, now, so with that, right now for this, I don't think there's anything here in terms of, looking at the technicals. Yes, we could talk about the retest of this, round number that we have here around this key 162.5. Interesting here, but, how about we're more, cautious with that. I think AUD/JPY, this was interesting for us, but I think for pounds JPY, you want to look at this level as well. You already retested it to the downside, but I think being more patient here is a good way to look at this. For the major pairs, pounds US is an interesting one for me, right? I think we're making our way back towards this key area of support. Let's just area of support around this 1.200. Now, I feel like if we get a pullback towards this area, anything back towards this region, right, could be interesting for sellers. Something around here could be interesting for sellers to look to push this lower again. Key area here, around the lows of yesterday to really get out of this particular one. Euro USD, also an interesting one as well. Just that we're trading very flat on the back of the dollar index flat movements as well, right? So I mean, that would still be, patience is really, really called for there. Although if you can get a pullback, I think a pullback here would not be bad. We get a pullback, it's just a bit far. I would have preferred a 50% pullback, but I think, there's really not even so much to anchor, our support levels to look out for. Right? Okay, good. We have one back here, going back to the 13th of May. So I think that's also very close to the 50% retracement level. So I think until we get something closer towards this region, I think I would still want to leave out Euro USD for now. So basically still looking to pair the weaker currencies. Generally, the high beta currencies, the euro still has a lot of weakness, the pound has weakness there, CAD has some weakness there as well, against the stronger safe havens. Although in today's session, because of the more choppy and messy environment, being more patient is a good way to go about the markets. Now, on the calendar today, like I said, yes, we have, yes, retail sales for Eurozone on a monthly basis and even year over year is also expected. Better numbers are expected there, so there's that to look out for. But mostly we have ISM services PMI for the US, as well as even the FOMC minutes also on schedule. So that, as well as even some other central bank speakers, Williams and Conliffe from the BOE, also they're expected in the calendar. But I feel like the market environments will still be very focused on sentiment, focused on the environment, the worries. I feel like we should even be more patient in trying to jump into, what we have in terms of market flows today. So that's it for now. Thank you very much. Please do not hesitate to ask a question if you have one, and then we'll see you some other time. Take care and do enjoy the rest of the trading session. Bye for now.